If you're a commercial property investor, you already know that protecting your asset is everything. We actually specialize in helping investors just like you. And today, we're going to dive deep into a critical piece of that protection puzzle, something called LRO insurance. By the end of this quick explainer, you're going to know exactly what it is, why you need it, and how to make it work for you. Let's jump right in.
Okay, I want you to picture this. A grease fire erupts in the kitchen of that restaurant you lease out. It's chaotic, there's smoke damage, water damage everywhere. In the confusion, a customer slips on the wet floor and gets hurt. So, who's on the hook for all that? Who pays for the building repairs, the lawsuits, the medical bills? The answer, well, it's a lot more complicated than you might think. And that's exactly what we need to clear up.
You see, one of the biggest and frankly scariest risks for any commercial landlord is what we call the liability gap. Seriously, think of it like a dangerous black hole between where your insurance coverage ends and where your tenant's is supposed to begin. If an accident happens in that gap, you're the one who could be paying for it out of pocket.
And here's the bottom line, the one thing you've got to burn into your brain. As the property owner, you carry the risk. It's all on you by default. That liability is your problem until you have a rock-solid, airtight legal document that officially hands that risk over to your tenant.
So, how do you plug that gap? How do you build your fortress of protection? Well, your first line of defense is a special kind of policy built specifically for landlords. It's called Lessor's Risk-Only Insurance, or LRO for short.
So what is it really? It's actually pretty simple. An LRO policy is designed for property owners like you who aren't operating your own business out of the building. You lease out most or all of the space to other businesses. If that's you, this policy is your absolute foundation. It's non-negotiable.
And this chart, man, it lays it out perfectly. It shows you exactly where the lines are drawn. See, your LRO policy is for the big stuff, the bones of the building, like the walls and the roof. It also covers you in the common areas, the lobby, the hallways, the parking lot. Meanwhile, your tenant's policy should cover everything to do with their business, their equipment, their inventory, and any accidents that happen inside their rented space.
Okay, so having your own LRO policy, that's step one. That's the baseline. But the real pro-level strategy, the thing that separates the savvy investors from everyone else, is making your tenant's insurance do the heavy lifting for you. And that all comes down to one ultimate lease clause.
And here's why that's so crucial. Think of your LRO policy as your last resort safety net. It's there to catch you if all else fails, sure, but the real goal is to never have to use it. You want to set things up so that if a claim happens because of your tenant, their insurance policy has to be the one to step up and handle it first. This, right here, this is the magic phrase. This single sentence is the most powerful risk transfer tool you have in your entire arsenal. This needs to be in every single lease you sign, no exceptions. You must require your tenant to name you as an additional insured on their liability policy.
So what makes that one little sentence such a game changer? Well, for starters, it means their insurance company is now legally obligated to defend you in a lawsuit. Second, it keeps claims off your policy history, which is huge for keeping your own insurance premiums down. And you might even get to avoid paying your own hefty deductible. It completely flips the script in your favor.
Okay, real talk for a second. I want you to pause and ask yourself this right now. Do you have a current, up-to-date certificate of insurance from every single one of your tenants? And if you do, have you checked it to make sure to explicitly list you, the landlord, as an additional insured? If you can't say yes immediately, you might have a serious hole in your protection.
The good news is, finding out if you have that gap is fast and easy. It literally takes about 60 seconds to start the process. That's it. 60 seconds to click the link in our description for a totally free, no-obligation policy review. But more on that in just a minute.
All right, so once you've got your LRO policy locked in and your lease is ironclad with that additional insured clause, we're not quite done. There are two more endorsements. Think of them as power-ups that every smart investor needs to seriously consider to level up their protection. And those two heavy hitters are loss of rents coverage and ordinance or law coverage. They might sound a little technical, but trust me, they protect you from two very different but very real financial nightmares after a claim.
First, let's talk about loss of rents. Let's go back to that restaurant fire. If it makes the space unusable, your tenant is going to stop paying rent. But let's be real, your mortgage company doesn't care. They still want their check every month. This coverage is what replaces that lost rental income so your cash flow keeps coming in while the repairs are underway.
Second is ordinance or law coverage, and this one is huge. Imagine your building was built in the 80s.
If it's badly damaged today, you can't just rebuild it to 1980 standards. Nope. You have to bring it up to every single modern building code. New wiring, sprinkler systems, ADA compliance, you name it. That can add tens, even hundreds of thousands of dollars to the rebuild cost. This coverage pays for that difference.
All right, let's recap. We've talked about that scary liability gap, the LRO policy that plugs it, the critical lease clause that transfers risk, and these two essential add-ons. So what's next? Well, the next step is actually doing something about it and making sure your investment is truly buttoned up.
And if there's one thing you walk away with today, please let it be this. Protecting your commercial property isn't just about buying an insurance policy. It's about having a strategy. It's about strategic risk transfer, moving the risk from your shoulders onto the party that's actually creating it.
And because we want to help you get this done right, we're making it super easy. Just click the link down in the description below. We'll give you a free review of your current policy, a custom LRO quote for your property, and we'll even do a complimentary check of your lease language to make sure you're covered. It's all free, no strings attached.
So really, it all comes down to this one question. Are you ready to stop wondering if you're exposed and finally close that liability gap for good?
Hey, thank you so much for spending a little bit of your day with us. I really hope this was helpful. If it was, do us a favor and hit that subscribe button for more practical tips just like this for real estate investors. And you can check out our other videos right over here. We'll see you in the next one.